Reliance climbs 2.5% as the top Nifty gainer on the back of a good third quarter driven by oil to chemical and retail businesses. Brokerages HSBC, Jefferies, CLSA also issue bullish calls on the stock.
On the other hand, Infosys is the top Nifty loser. It slips close to 5% despite an inline set of numbers as the management expects impending wage hikes to impact margins in the coming quarter along with lower pass-through revenues.
Axis Bank slips 5.5% after reporting weak third quarter numbers. The bank's business momentum is at a 15-quarter low. Net interest margin too comes in at a 10-quarter low of 3.93%.
LTIMindtree is under pressure along with the rest of the IT pack after reporting third quarter numbers. The company posted a mild beat on expectations in the third quarter.
Hudson Agro's gross margins decline once again. Revenue growth fails to meet estimates in the third quarter. The stock is lower by almost 6.5%.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangalam, and the key index you need to track today actually is not the Nifty but the mid-cap index. On the top of Mangalam, as you can see, well, that one's trading in the green, and that's the reason why your portfolio will be feeling quite good. Added to that, the index that's on top of me, well, that one in fact is down close to around 50 points, but I'll tell you what, it was down nearly around 150 points around 45 minutes ago. So I'll tell you what, Mangalam, things are looking quite good, but I think the one out here, the Nifty Bank, that needs to give up the underperformance for the bulls to feel better going into that weekend.
I take that point completely, Nigel, but my sense is that, it's a very good session. If you give or take the kind of moves that we're seeing on the market right now, and on a day, if someone told you that Infosys is down by, the amount that it is, Axis Bank is down by about 5% as well, and yet the Nifty is down just 53 points, one would take it with both hands. They would say, oh yes, this is a decent trading session so far. And this, after 2 or 3 days of positive up moves that we've got on the Nifty itself, Reliance is doing its bit and supporting the Nifty, and as a result of which, we're seeing an up move.
Well, Mangalam, for this week, I'm viewing it like a test match, because on day one, you had, the batsmen that got knocked off, and everyone said it's going to be very, very difficult. But getting into day 5, the bulls will be feeling quite good because they are saying we have gone through all those challenging phases, a green top, but we hung in there, kept our eye in, and in fact, we're still survived, or even on the day 5. So I think the test match so far has gone pretty okay. When on day 1, you thought that the bulls are going to be battered out of shape.
Take that point, and now that the sun is out, look at some of the other stocks as well, which are also batting for the bulls right now. ITC, for instance, has done extremely well this week. Went X the hotel business. Now the street is viewing this as a pure either tobacco or FMCG play along with all the other businesses that they have. So before the hotel business lists, this is something that the street is looking at in terms of valuation, and the stock has moved higher as well. So we'll keep an eye out on all of this as we go along. Let's get in Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Chandan, the last 2 or 3 days, something has flipped. We've managed to hold on to the lows, managed to close in the green. And today, we had a gap down. From there itself, we've recovered a fair bit despite Axis Bank and Infosys losing.
Yeah, good morning, Mangalam and Nigel. Thanks for having me. So the good part is that supports are intact, but the concern is follow-up is missing. The good part is that Reliance is holding, but the concern is Axis and Infosys are slightly going down. But somehow I believe that selective stock-specific action will be there. As of now, the index has to cross and hold beyond 23,333, 23,350. Then only the short-term pain will be out to get a decent short covering trigger in the market. Otherwise, bounce could be sold in the absence of follow buying activities. On last trading session, the index headed towards 23,400, but was struggling to hold about 23,350 and then close near to lower levels. Even today also, it tried to attempt for 23,300, failed to surpass, hovering near 23,250. So for me, 23,333, 23,350 is going to be a key level. Above that, only the bulls will be at comfortable zone. Otherwise, you need to be in a broader range with multiple support at 23,000 and 22,800 level. Looking at the entire price movement, I believe it's going to be again stock specific. We have to be good at finding out the right ideas with strength. So first that is buy on SRF. The stock really rallied well in the last week, and in last 3-4 days, it witnessed a corrective move and again fresh up move. So technically, we can call it as a bullish pole and flag pattern on the lower time frame, which has bullish implication. So we are recommending to buy on SRF with support of 2560, and this stock can head towards 2720 kind of level. Second trading idea, I'll pick from Nifty IT pick, that is buy on LTTS. The stock has really done well in last 3 trading sessions, rallying from 4680 to 5400 zone. On weekly chart, the stock is at words of multiple weeks or multiple days breakout with surge in the open interest and the volume activity. So with support of 5300, LTTS can head towards 5600 levels. And I believe the market is going to give more weightage on the selective sector and stock rather than looking at the broader picture on the Nifty and the Bank Nifty. And Bank Nifty is slightly negative until it doesn't surpass 49,000 zone.
All right, we take that point, Chandan. Just hang in there with us. It looks like, pre-budget moves have started already. We're seeing some booster, expected for, I guess, the real estate sector. Because if you look at it, macro tech developers up around 6%, Suntech Realty up around 5%. We're seeing a big surge on Kolte Patil as well. So a lot of these keynote or the Keystone Realtors, all of them are doing extremely well. That's ICICI Lombard. We're talking about Suntech Realty and macrotech developers along with Kolte Patil. All of them spiking. But one stock which is actually under a lot of pressure has been, Kalyan Jewellers. If you look at it, down 17% this week. We were talking about how yesterday, if you look at the shareholding pattern as well, there are large stakeholders there, including the promoters, a couple of funds, etc. as well. From a chart check standpoint, the stock in F&O ban, Chandan, do you have a view here? Because it's seen rapid correction, almost 33% from its highs, 35% now as we speak.
Yeah, so the entire structure of the Kalyan Jewellers has turned lower, especially in last 2 weeks. It has been making lower top, lower bottom as it fell to surpass 800 zone. And if I look at the price behavior, at least it took 75 days to surpass that level, and 5 times there was attempt to move beyond 780, 795 zone. And this time the failure breakout turned to the lower zone and stock is making lower top, lower bottom. So I believe some more profit booking could be there in the counter till it holds below 530 zone. It can drift down to 490, 495 levels on the lower side.
I'll tell you what, today's decline is all the more important on Kalyan Jewellers because after today's decline, the stock has fallen below the price at which the promoter bought from Warburg Pincus as well. The promoters bought from Warburg Pincus at around 535 odd rupees. Today, the stock is down 23 rupees, telling you that at 515, it is below the price at which the promoters bought as well. So we'll most definitely keep an eye out on Kalyan Jewellers from here on as well.
Well, the promoters' hands are tied as well till the results. So we'll have to wait by to see what happens after that. But as Mangalam says, it appears, the bears have really hugged this one and the stock has lost 30% in the last few trading sessions. Thanks a lot, Chandan, for joining in. Let's shift focus to our special segment. We get a few ideas for profit from Money Control Pro. Khushbu joins us to help us out with the stock she's tracking. Khushbu, take it away.
In today's idea for profit, we have Cholamandalam Investment and Finance Company. The company has a diversified business model with a strong focus on rural-centric retail customers. The company also has a stable asset quality. The company's growth was ahead of guidance in a challenging quarter where mortgage loans outpaced the core vehicle finance segment. Moreover, the strong growth trajectory continued in the new businesses. While the affordable housing finance push will drive growth, the festive demand and higher rural cash flows will aid vehicle loan growth in the near term. Hence, we believe that the asset growth will continue to surpass guidance in the 25 to 30% range in FY25. Moreover, the business is shifting towards the high-yield product mix, which will help the company to sustain healthy profitability, while the low credit cost of the mortgage portfolio and improved collection in the vehicle finance will support the overall asset quality. Though higher than the industry average, we believe that the premium stock valuation of Chola is justified given the higher quality of the earnings.
All right, with that, let's move on. We'll slip into a short break. And as we do that, let's hear out Grow Code, a special initiative by Grow and CNBC-TV18 designed to provide you with valuable insights, strategies to navigate the market and make informed trading decisions. Today, we'll look at the rising trend of investing in SME IPOs and address some of the problems that traders face when they invest in a company without understanding the financials. Listen to that, take a short break, come back, focus on the markets.
The Indian SME IPO market is booming. With a growing number of listed companies, an ever-increasing market capitalization, and soaring investment optimism in the segment, investors are flocking to SME offerings. But are they making informed decisions? Experts suspect that investors may be overlooking risks before joining the SME bandwagon.
In these small IPOs, people are coming not for a long-term growth, wealth creation. They are coming to make quick money. And when they hear on YouTube or on TV or they read in the newspaper that any particular SME IPO was listed with 100% gain, they get interested in that. They ignore actually fundamentals, they ignore the products and services of the company, and this creates the whole problem.
For investors, limited financial records and disclosures by SMEs, along with post-allotment liquidity issues, can significantly impact returns. There are other risks to consider too.
I have seen a lot of companies, those were listing with 100% gain, but within next 1 year, these companies came down by 50%, 60%, 70%, 80%. And because the liquidity and volatility is there, people were not able to exit also.
The complexities of the SME IPO market requires a nuanced approach.
SEBI understand that big size retail investors should be participating in this SME IPO, and that's why they have kept the minimum investment amount 1 lakh and more.
Research and risk assessments are essential to navigate the SME IPO market successfully. Don't let the hype cloud your judgment. Informed investments are always the safest.
Market's given up some of the gains, and that's largely on account of other banking stocks falling along with Axis Bank as well. So pull up the intraday chart of, say, something like a Kotak Mahindra Bank, ICICI Bank or HDFC Bank. You will see some pressure out there clearly, down 800 points for the Nifty Bank, and as a result of which the Nifty now down 100 points as against 50 points when we started the show. The mid-cap index too is mildly off the highs. One stock that is on our radar is Varun Beverages, down almost 3.5%. It's actually corrected a good 18-20% from its highs. The street was hoping for, some sort of consolidation coming in this space, but no, there is still aggressive competition. And yesterday, the takeaway from Reliance's results told you that Campa actually has a 10% market share in the sparkling water category or the sparkling drinks category in a couple of key states. And they have also said that, two of their FMCG brands, Campa and Independence, will cross the 1,000 crore mark when it comes to turnover in this category itself. So maybe incremental growth could be challenging because of competitive pressures, and that's what we're seeing on Varun Beverages as well. But let's move on. Let's talk about the Tata Sons IPO or the potential Tata Sons IPO. Some updates coming in on the Tata Group. Tata Sons is still registered with the RBI as an upper layer NBFC, and this could mean that it may have to mandatorily list by September this year. Ritu joins in with more. Ritu.
Well, no respite for Tata Sons just yet because its application for deregistration as an upper layer NBFC to avoid an IPO is still under examination by the Reserve Bank of India. For the third financial year in a row, Tata Sons' names continues to appear on the list of upper layer NBFCs recognized by the RBI, and that means there is a possibility that the company may have to go public if its application is rejected by September of this year. Now, the scale-based regulations for NBFCs that were introduced in 2021 identified Tata Sons as an upper layer NBFC in September of 2022, giving it a 3-year window until September this year to go public. So the decision on that application to deregister is still being examined by RBI. Keep in mind, last year, in a bid to stay private, Tata Sons had repaid debt of more than 20,000 crores and submitted this application to deregister to the RBI. No decision, however, has been made on the matter just yet. Now, this is also going to be a test case because it's the first time we're seeing a company trying to get out of this list of upper layer NBFCs. There are no regulations or, set procedures that have been laid out by the Reserve Bank of India for this. But of course, RBI does look at the size of the entity, the interconnectedness, the complexity of the liabilities, group structure, all of it to decide the list of names. Now, keep in mind, while Tata Sons' application is still being examined, there's another Tata Group company, Tata Capital, that continues to be identified as an upper layer NBFC, and that means the company may still have to IPO later this year to comply with RBI regulations.
Thanks a lot for that, Ritu. We'll keep an eye out on this evolving story. The other big stock that's under pressure is Axis Bank. It's down 5% after reporting its third quarter numbers. The bank's business momentum is at a 15-quarter low. The net interest margins too have come in at 10-quarter lows of around 3.93%, while the slippages also moved up. In fact, let's listen into the management of the bank that spoke post the release of their numbers.
We observe an increase in risk in certain segments and specific programs for personal loans and cards in the past. Our proactive interventions, including regular portfolio monitoring and early warning triggers, have allowed us to recalibrate policies to ensure delinquencies remain within acceptable thresholds. We have priced for this risk that we are seeing manifest today. Given the heightened delinquency levels in the industry, we continue to remain cautious in our outlook towards unsecured. We have continued to strengthen the collections infrastructure, including use of tech enablement at front end to improve collections capabilities.
All right, with that, what we'll do is slip into a short break. But before we do that, let's go across, look at the big good news coming in for you viewers. India's business news leader, just a click away. Right now, you will have it. It's popped up. It's the latest app that you have, the CNBC-TV18 all-new app. What you get from this is all the updates coming in from the financial world at your fingertips. Download it right now from either the Apple Store or the Google Play Store. Or scan the QR code which is there on your screen right now. To Nigel's right, just take out your phones, put on the camera app, scan this code. That will take you to the link to download this app. Once you download it, all the updates from the business world right at your fingertips. Do that, take a short break, come back.
Welcome back. Well, the markets have moved to the low point of the day, and Kotak Mahindra Bank is one bank that's quite nervous ahead of its numbers that are going to be declared tomorrow. So that one should come up for you on the screen. It just moved to the low point of the day. Let's move on though. Sources tell CNBC-TV18 that the government may set concessional rate at 18% instead of 15%. Timsi Jaipuria, she's picking up that scoop. She joins us to fill us in with more details. Timsi?
Well, that's right. What sources are indicating to CNBC-TV18 that the government is considering a reintroduction of the concessional corporate tax rate. Government currently is mulling reintroduction of the concessional scheme for new manufacturing units, but in a slightly different avatar when it comes to rates at 18%. As against 15% earlier. Government is considering to bring back this concessional corporate tax scheme to promote Make in India, to create employment and yes, to enhance manufacturing capacity within the country. The view at the North Block, what sources indicated is that India Inc. has been asking for a reintroduction of this particular scheme to promote Make in India for quite some time. And when we talk about the current status of this proposal, well, the proposal is currently under active discussions between North Block and the PMO, and no decision has been taken as yet because sources indicated that any decision pertaining to the taxation policy is taken only closer to the budget, that is just 3 to 4 days before the budget. Just to remind our viewers what this concessional corporate tax regime was, well, the concessional corporate tax rates were notified in September 2019 with a sunset to end in March 2023, but the scheme was extended by 1 year till March 2024 of 15% plus cess and surcharges for new manufacturing units because of the delays that were induced due to the pandemic. And post that, since March 2024, the scheme which has had a sunset, India Inc. has been sending requests to the government to reintroduce this particular scheme again for the new manufacturing units. Meanwhile, email queries sent to the Finance Ministry remained unanswered on this particular proposal. So we'll have to wait and watch and see what finally Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
Absolutely. We'll most definitely keep an eye out on what the announcements are. Let's get another exclusive, Timsi. We learned that the government may actively be mulling income tax relief in the budget as well to boost consumption. Do you have more on that? Because that would come as music to the ears of everyone.
Well, that's right. What we are given to understand from sources is that the government currently is actively considering personal income tax breaks to spur consumption demand and to boost the economy. Government currently is studying 2 options on tax breaks, and any decision will look to make only the new tax regime more attractive, is what sources say. Now, some of the options that are there on the cards for a tax relief. Firstly, option 1, to increase the standard deduction limit from 75,000 rupees per annum, which is the current limit, anything up till 1 lakh rupees, and it could be in any proportion, either 75 to be made 80, 85, 90, 95, or even 1 lakh rupees per annum. That is something that is yet to be decided. Secondly, this particular option is to move the slabs in the new tax regime. Now, here government is considering 2 options. Firstly, to expand the 20% tax slab to cover income between 12 lakh and 18 lakh rupees, or even going beyond 18 lakh rupees till 20 lakh rupees. Remember, currently this slab is 12 lakh to 15 lakh rupees, where the tax rate is 20%. And then as a follow-up to this, since the 20% slab will move, follow-up will be the movement on the 30% slab as well, which is also an option, where it feels that then as a follow-up, 18 lakh rupees or 20 lakh rupees and above could be the income bracket for the higher tax rate, that is of 30%, which currently is at 15 lakh plus. So let's see what happens finally, because sources indicated that government believes tax breaks will mean more disposable income. It will boost the spending power. Plus, this increased spending power by the common man will help recovery in both direct taxes and GST collections. But just to remind our viewers that a final call on the tax break proposals will be taken up by both Finance Ministry and PMO only closer to the budget. It is taken only 1 or 2 days before the budget, and email queries sent to the North Block on this particular story have remained unanswered. So let's see what Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
All right, we take that point. Thank you so much for that. When we started the show, the mid-cap index was in the green and the Nifty was mildly in the red. Now the Nifty is deeply in the red and the mid-cap index also in the red as well. So there has been a swift decline. What we'll do is leave it to the team of Trading Hour to take the market action forward. There has been a swift decline led by the Nifty Bank and a couple of heavyweights which are now giving way.